Most blockbuster movies get a sequel. It may be to fix a few loose ends of the story. Give more depth to characters. And most importantly, feed viewers cravings for more. But what happens if this plays out in the stock market? Last week, the U.S. stock market witnessed a probable sequel. Shares of American video game retailer GameStop jumped nearly 179%. It wasn't any good news about the company that drove share prices. In fact, GameStop is currently in very bad shape. So, why did GameStop share prices surge this week? GameStop is a meme stock. Meme stocks are stocks that gain popularity through hype on social media. Small, individual investors often start buying a company's stock after being influenced by investment advisors on social media. AMC, BlackBerry, and Bed Bath & Beyond are some other popular meme stocks. But that gives rise to another question. Who is hyping up these meme stocks? Here's what happened last week. A social media post pushed the share prices of GameStop and other meme stocks. The post was made on social media platform X by an account that went by the name of Roaring Kitty. This account is managed by Keith Gill. Gill is an American stock market investor, but he is more popular for his YouTube channel where he advises people on stock market investment. In 2021, his market advice on his social media platforms helped push GameStop's share prices to historic highs.
A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis.
Keith Gill has been inactive on social media for the last 2 years, but now he has resurfaced. Gill's post on X showed a sketch of a man leaning forward in a chair. This is a popular meme among gamers. It indicates that things are getting serious. While these posts didn't mention GameStop directly, Roaring Kitty's comeback was enough to encourage people. They started heavily buying shares of GameStop. And just on May 13th, more than 175 million GameStop shares changed hands. To understand this better, let's go back to 2021. At the time, GameStop's business was on the brink. The firm's sales had been consistently declining for years. This impacted the firm's share prices as well. By mid-2020, GameStop shares dropped to nearly 60 cents. In this dire condition, social media came to the rescue. A group of Reddit users helped create hype about GameStop shares. It was in a subreddit called Wall Street Bets. By the end of 2020, users on this forum started buying GameStop shares. They encouraged others to do the same. They used memes to drive this trend. As more small and individual investors joined in, GameStop's stock soared to incredible heights. In January 2021, shares of GameStop surged as much as 21-fold over 2 weeks. Keith Gill, also known as Roaring Kitty, was considered key in driving up the stock prices. He shared analyses and encouraged others to buy the stocks. His influence was huge in the GameStop rally.
So there's a bit of a rush into GameStop, a bit of a crowd frenzy going on, which I think is to a large extent driving the stock price up. I think a couple of weeks ago, a lot of the stock price increase was that same group of people online on Reddit and some other sites, and added to that was the short sellers having to cover positions, which was sort of jet fueling the increase in the GameStop price. But I think at this point, it's become more of a social media phenomenon.
But what motivated these online investors to buy GameStop? Well, there were a couple of factors. But the most important one was people's desire to punish Wall Street and its big players. At the time, people were under a COVID-19 lockdown. Many were losing their jobs. However, big financial corporations were at the other end, and this frustrated people. For a group of Redditors, GameStop became a medium to punish corporations. Their first target were the short sellers of the stock market.
And we're not as dumb as everyone thinks we are. We know what we're looking for. And people will say we're in a casino betting on AMC and GameStop and whatever it may be. But the real fact of it is as some of us are out there and we're seeing these hedge funds that have been getting away with this for years, overshorting these companies and hammering these companies into the ground, and no one says anything.
Short sellers are different from usual stock traders. They are typically hedge fund managers. Unlike usual traders, short sellers bet on a stock's price going down. They often target struggling firms to make a quick buck. By mid-2020, GameStop was in this situation. The short sellers analyzed the company's weaknesses and started betting on its stock prices declining. However, the situation didn't exactly pan out as they expected. As short sellers put their bets against GameStop, Reddit users took note. Financial influencers like Roaring Kitty and others hyped GameStop shares. As more small investors joined in, GameStop stock soared. This led to short sellers facing massive losses. One investment firm, Melvin Capital, was even forced to shut down. But what goes around comes around. These Redditors were largely using trading app Robinhood to carry out their transactions. As Robinhood took note of the situation, it decided to act. On January 28, 2021, Robinhood stopped users from buying GameStop shares. And suddenly, all the hullabaloo came to a standstill. The Redditors couldn't buy the shares, and GameStop's meteoric rise came to a halt. This decision caused panic among investors. Many started selling their shares in the company, and as selling increased, GameStop's stock price plummeted. What followed were days of stock market volatility. A congressional hearing also took place. Keith Gill was asked to testify, and with that, Gill dwindled from the limelight. But now that he's made a comeback, things have started to heat up. Some analysts say 2021's meme rally is very unlikely to repeat. This time around, they are banking on investors to be more rational. They hope investors will focus on GameStop's financial condition before investing. However, some experts think otherwise. They believe the 2021 saga could repeat itself, and if that happens, the stock market is likely in for another wild ride.
Firstpost reports from the world's second largest continent. Hello, I'm Alison LaGrange. A very warm welcome from Durban, South Africa. We get you the news and the newsmakers from Africa. South Africa goes to the polls on the 29th of May. I will track the election and bring you ground reports. Is it the end of the road for the African National Congress? And will former President Jacob Zuma stage a dramatic comeback? From elections to climate change to innovations and opportunities. As the world's attention shifts, we report from Africa, the heart of the global South. Join me every weekday live on Firstpost.